development, is that, what are you seeing in the development space, Moss? Are you seeing that developments, and this is not builders, we're talking about actual developments, more development activity happening, less development activity?
I think, I mean, every time I speak to a developer who has a site that is ready to go, I feel that nervousness is definitely there, and that's playing its part. With rising interest rate, build price is still significantly higher than what they were expecting, say
Yeah.
12, 24 months ago. Their appetite to develop has definitely come down, which means that, there's a lot less stock
Yes.
on market. Even people are scared from building as well. And so there is not a lot of land sales happening. And so people are like, if you have a finished
Yes.
product, I'll buy it, but I don't want house and land anymore. I don't trust the builders, I don't trust the process. And so there is a lot of that happening as well. And so that constraint is definitely playing its part. You can see one of the key indicators that we follow here is, say, building approvals, and you can see a sharp fall in building approvals over the last sort of at least 2 quarters. And so it's interesting. I say this, that people who are brave and have seen markets like this before know that this shortage of supply would continue towards the demand pressure, which ultimately goes back into the price increases, and so you will get your prices. And I was having an interesting conversation with my own project manager where we are looking at a particular project and the prices are like $30,000 to $40,000 versus where our GRV was. Still profitable, but it does leave a bad taste in your mouth. And so, are you brave enough to still go ahead and build it, knowing that the muscle memory would come back and the prices would go back to those levels, or would you just sit tight and wait for everyone to happen? What do you think about some of these impacts, Cheryl?
Yeah, I'm seeing developers a little bit jaded.
Yes.
In what's happened in the last sort of 2 years. I've had sort of commentary around, I'm just going to step away from building for a little while and just develop land, and someone else can do the build. So you're not exposed to all those uncertainties that's happened. We've had uncertainties with obviously pandemic, weather, we have bushfires, we have all sorts of things. Australia is the best place to live, but you've got all of these to deal with. Like the most sort of small, medium-sized developers are probably not being as, they're a bit more risk averse, I'd say, in that regard. Probably pulling back a little bit more and looking at more maybe smaller scale developments where there's a quicker turnover. They're not relying so much on pre-sales and things like that for large townhouse developments.
Definitely.
Because and I'd say that's probably a prudent thing in the current market, because the success of your project obviously depends on, people purchasing, people having the appetite to purchase, and where there's low consumer confidence, then that's going to have a knock-on effect.
Yes.
I'd say that there are definitely, I'm seeing a lot more people, if they're developing, they're doing a build to rent.
Yeah.
A build to rent model where there's larger focus on cash flow.
Yes.
And less on, and holding long-term in the market, time in the market, as opposed to relying on the revenue from sales.
Yeah. And I mean,
are you seeing that as well?
Let me play the devil's advocate here, right? Because I was talking to a person yesterday, and I say to them that while you're holding this particular property, right, at $1.6 million that you've acquired, you're getting a rent of say 400, 450, 500 on it. While the interest rates are rising, you are eating away into profits technically, right? Because your GRV is not really going up. And so would it not be in your best interest to start doing the developments so that you're ready, right? Because ultimately you need to take the exit, right? And so where does this stop?